A very good morning to you, sir. Thank you for joining us. You had your latest data out about developments in terms of inflation. What's your general take at the moment on where consumer sentiment is going in the UK at the moment?
Right, yes, you're right. We've just put out our monthly Nielsen numbers on inflation, and we saw a sharp hike in our reported inflation in December, 2.2% inflation against November, if you recall, which was nearly flat. So that's bad news in one sense, but not a surprise, because it's the 1 month, of course, in the 13-month VAT holiday that we've had, where we've had a real apples with apples. So there was 15% VAT in December in both years. So we were expecting to see some growth there, and we did indeed see some inflation in non-food for the first time in over a year. Food inflation also hopped up, and that was mainly due to ambient food, packaged food growing. And we have seen commodity prices, sugars up more than double over the year. And cocoa, for example, is up 25% year on year. And of course, as you were reporting earlier, oil prices, which are a very important component of ambient food costs, have leapt year on year. So that's feeding its way onto the shelves as well.
So not much hope for UK retailers, for UK retailers that they might improve sometime over the next month, especially because we had the VAT tax coming back in, normalizing again, you might want to say, and also the outlook for elections this year and some severe budget measures, obviously, whoever might win. What's your take on how retailers will handle all these challenges?
Well, we're blessed with a highly competitive retail sector in this country, which has held back prices since the recession really began to bite very effectively, and I'm sure that will continue. But there are some real issues ahead of us. Let's not forget, in terms of the domestic budget, so households have found that we estimate about 6% more to spend year on year when we last looked at it at the end of November. But the fact is, as people come off low-cost tracker mortgages, as those fixed terms end, maybe less than 0.5%, when they go back into the market, they may well find themselves on 4, 5, 6% interest for the same deal. So what we're going to find is that the domestic budget is under pressure from mortgage repayments, and also under inevitably rising utility bills and petrol costs, as well as the VAT hike taking an effect as we go further into this year. Don't forget, we've got a tax rise already, income tax rise already on the cards for April, and the big unknown remains what will happen after that election.
All right, difficult year ahead. Thank you so much, Stephen Robertson there from the BRC.